Howdy. How we doing? It's been a little bit. If you're wondering about the door, this was the result of a very tumultuous trade. And unfortunately, with all things revolving around bad trades, bad things happen. It's Newton's second law, so we're not going to worry about it. In the meantime, we're going to talk about a trade that went really well. Today was an $84,000 day. There's been a lot of suggestions as if I'm paper trading, and I can assure you this is all very real, including the door. So there's also a very special feature that OnlyFlows is announcing soon that involves that whole scenario, let's just say. I think today was actually more of a $45,000 day. These VIX contracts, which I bought at about 70 cents, I believe, Schwab is saying are trading at $5 a contract. I got them for about 70 cents each. I went through a data provider from the exchanges, and I'm not seeing any transaction at $5. So I think this is just a bad quote. Anywho, quickly, because it's 2 in the morning, and I will be live trading tomorrow in the OnlyFlows Discord server if you'd like to join me. We're going to have a couple guests, we'll call them. So if you want to come around, I'll link it in the description. No OnlyFlows subscription required. It's completely free. I'll be there tomorrow morning to trade. I just wanted to go through kind of what I was doing today and how I use this in my day-to-day, and hopefully concisely and quickly. It's something that I've been working on to explain things in a more simple manner and not get into the nitty-gritty. So first and foremost, the market dashboard. You can find this page over here, and this will show you a snapshot of the whole entire market. We include options data and dark pool data. So at the top, we can see that NEM is reporting the most unusual dark pool activity. Biggest flow is on EWZ, the $40 puts for January 19th coming up. And then I can see the total inflows and outflows right here for the whole options market. So this is every ticker, every exchange. This chart kind of pairs with it, and this is just incredibly powerful. I cannot even begin to describe how awesome this has been. If I just toggle off the call premium, put premium, and the sweeps, I can now see percentages of call positions being opened and put positions being opened. And you can see that all down here. In fact, down here in late October, when we were at this bottom around 410, you can see that the calls versus the puts, I'll just toggle the calls off real quick. So there's the puts. Here's the calls. Were overwhelmingly being opened. And that, to me, was a signal to go long. It was just kind of a happenstance. It's important to note that not all call options are bullish and not all put options are bearish. It's a very firm axiom that you have to understand in this type of market. Calls typically are bullish, but if calls are being sold, that's bearish. And institutions, and especially volatility selling nowadays, a lot of that going on, but I'm not going to get into that rabbit hole because I just said I wouldn't do that about a minute ago. The opposite of what you think is bearish or bullish will be bearish or bullish. So if calls take place at the bid, that typically means they're being sold, which is a bearish sentiment. The same thing with puts. If the put transaction is taking place at the bid, that typically means that puts were being sold. And that is a bullish thing. So we kind of have to keep those things in mind here, because you can have an opening position that takes place at the bid for these calls, which would be a bearish opening position. But for the most part, we can see that this was a consistent thing. It was repeatedly happening. And if we pair that down here with the dark pool rating, so to speak, without giving away any secret sauce, you can see that during that trough hanging out late October down in the 410 range, the dark pool activity was through the roof. So if we see a bunch of call opening consistently and we're seeing an uptick in relative dark pool activity, that was my signal. That's what I used to go long. We can also see the highest dark pool activity, the top sweep orders just in general. This is querying all of our database. The top block orders, which of course, all the database, you can scroll through all these. Looks like we had some SPY puts being sold. That was today, actually, right after close. $8 million at the 490 strike. So I wouldn't be surprised if we keep going higher. And then unusual bullish and bearish flow and all that good stuff. So this alone right here, this market dashboard, is one of my favorite go-to tools because it's giving me, the macro perspective. Most things you trade, especially in today's market, everything's kind of interconnected very much more than it was even just a couple of years ago. There's tons of ETFs, ETNs, just the way that volatility is being systematically handled nowadays. Even pension funds are jumping into the vol selling. Everything's so interconnected that most of your beta, so relative to a benchmark, you're going to have, I think, some considerable correlation there. So even if your play is doing well, if the overall market decides to relax and take a breather, there's a fairly decent chance that whatever play you're in is going to suffer from the same thing unless it's being event-driven. So I try to base all of my activity for the day around what the overall market is thinking. If I click out of the call opening and put opening percentages and just pull up the purchased call sweeps and purchased put sweeps, again, to be brief, a sweep order is when someone or someone's come up with a specific option contract that they want to get their hands on, where the amount that they're trying to purchase is greater than a single exchange's supply. Or in other words, whoever is selling on a particular exchange, the amount requested to purchase is greater than that. So market makers and market circuits will take that single order and then split it up across multiple exchanges. That order then gets flagged with a sweep code, and it telegraphs essentially that there's some urgency to this. One of the big misconceptions is that you can't have a sweep order that is being sold, which is totally not true. Sweep orders can be an act of selling. So instead of too much being requested to purchase, it's too much being sold to purchase to a single bidder on an exchange. But these orders are really, really, really important because they telegraph 9 times out of 10 what the person transacting is doing, or at least their sentiment to what they're doing. So if we toggle that, we can see all the way back here in this October trough, right after the gap up, there was that huge, huge, huge amount of call sweeps that took place. And again, this is market wide. And then that, sent us up from about 425 up to 450-ish. And then at 450, we saw another one of these, huge, just out of nowhere. Even this one right here, relatively speaking, was an outlier. And then ever since, this entire market has just been getting perpetually squeezed, I believe. If we go back to the percent call and percent put opening, we can see that ever since we broke past that 450 mark, we have seen puts being opened like mad. More so than OnlyFlows has ever encountered. This is some proprietary data that we're aggregating. It's just been a non-stop squeezing of puts. And you can even see when puts start to uptick even more, or when the call opening reduces, we just melt up a little bit higher, and then the way that market maker mechanics work and how they have to hedge helps contribute towards that uplifting force. We typically call that being long gamma. We'll get to that in a different video. But it's been a perpetual squeeze. And so realizing this, I've been monitoring this and following this trade for a little bit now. I'm looking for squeezy names. So your meme stocks, your fundamentally terrible stocks, your growth stocks, your Teslas, your Amazon's pseudo value, I suppose. Rivian, Neo, Riot, Marathon, crypto stocks, GameStop, AMC, meme stocks, emerging markets even. There's been a lot of cyclical whiplash that's taking place where all of these really high alpha yielding shorts over the past 12 to 18 months, they're now starting to see some activity kick up. And when that happens, that initial wave, that wake of people buying back, triggers a greater wake around it, because that type of alpha yielding is the precipice is that that area of water is to stay relatively smooth. So just even a little bit of rippling can begin to compound and create some interfering, what do you call it? Interfering, I can't remember the word. It's all right though. So Riot has been a big one for me. Actually, Marathon. This has been unbelievably crazy. In a different video, I'll show the call-outs. I've been calling out Marathon, Riot, and Coinbase. Coinbase has been... I was calling out Coinbase since like $75. So what we can do is if we go down here to the bottom, we can type in our ticker, and it'll take us to a dedicated page for that ticker. Constructive interference, is that the thing? Yeah, that was the word. I knew it, I just didn't say it. Anywho, so here's Coin. I was calling it out back here. This would have been circa November, mid-November. And this right here is a chart of dark pool activity. Now, this isn't just strictly volume and strictly like premiums. We're doing a lot of mathematics to create these relative values. So relative to the past, this was the biggest amount of activity we had seen in a while. And what's cool about OnlyFlows is that we're able to, through proprietary methods, is all I'll say, we can get very close to determining the sentiment, even though there's technically no bid and ask within dark pools. We'll make a video entirely about this subject. But the reason why I'm saying this is that we're able to come up with a range of probability of if the dark pool sentiment for that day is bearish or bullish. So you see these little bubbles. I'll see if I can zoom them in after the video. If the bubble is below the candle, like the halfway point, that equator, that typically means that it's bullish. If the bubble is above that halfway point, that typically means it's bearish. And so we can see that right here, this was just below that midpoint. And then the following day, we saw it at the open, I believe, right here, which is below this red candle. And of course, the next day was green. And then at the top of the green, we see that bubble just a little bit, and it fell down the next day. And then we saw it at the bottom and the top, and you get the point. So it's not always correct, but it's better than anything else I've ever used. And sure, I have some bias here, but I was also the person who called it out at 75, and it's now trading at 187.5. So that alone was a lot. If we toggle off the dark pool orders right here, we can start to see the sweep orders, the stock sweep orders, which are very peculiar, we'll say. We'll get into that later. We can also see the recent opening trades right here. We can see the recent sweep orders for the options, the recent block trades, lots of stuff. But down here, this is by far my favorite. This is what I go to when I'm evaluating a ticker. This is called our hot contracts module. And this breaks down all of the option orders into three categories. The top opening positions, the top largest orders, even though that's grammatically a little shoddy, and then the top sweeps. So we group the contracts by their strike, expiration, etc., and then order them from least to greatest in terms of if they are opening. If they are larger than usual, we have rolling levels for every single stock. I can tell you what is above average and below average for every single stock. And then by their sweeps. And for Coinbase, the calls were going through the roof. It was, I can remember the $100 strike, the $105 strike, the $90 strike, all for like 2 to 4 week expirations. It was like reading a book and seeing a lot of puts being sold. So, of course, right here, red means sold, white is neutral, so at the midpoint, and then blue means purchased. So we see a lot of selling of the 180 put and a lot of buying of the 340 strike for 2026. And then, of course, a lot of put selling. We can click on that, and it'll bring us into a dedicated view of the contract. So today, actually the past week or so, has been a lot of this put selling at the 170 strike. And if we just zoom out to like the 6-month view, lots of selling, even back here, December 21st, and back here on December 19th. And for the most part, to date, today, past week, past month, 3 months, it's been predominantly sold. And we can check out this 180 put as well. And we see that some purchasing was taking place, but we also have an order under the largest trades that took place 2 days ago. No, it would have been yesterday. For $250,000 in premium, $60,000, $50,000. Lots of selling, and then we can adjust our time frame here and see what exactly is going on. But for the most part, it's been sold, so that is also very, very bullish. Simple stuff like that. Even at the top of here, I can see that the $200 call is the most active. That was from this trading session, this most recent, for Friday's expiration. And it's no surprise that this thing is up, it's like up 3% in after hours now. We got some other features here. Flux. This is we're gonna save a video for this because it's being touched up. This little module right here, this works. It just needs to be polished because we don't even have like the navigation bar at the top. I need to add that. But this is the expiration breakdown, and this shows you this first chart being on the day, and then the bottom chart being on the week. And each of these are strikes for the particular stock you're on. And if the bar is above 0, that means it's being purchased. If it's below, that means it's being sold. So cumulatively, throughout the day, this 140 put was being purchased because the red bar is up, and the 140 call was being sold. But we can also see that the 165, the 170, and the 175 were all being purchased a lot and in succession. This is very reminiscent of a ramp kind of mechanic, which is exactly what it is. And then we saw some puts at 180 that were purchased. If we scroll down to the weekly, so this week, lots of put selling at 150, lots of call buying at 155, 165, 170, and then this very natural looking reverse ramp effect on the puts. I wouldn't be surprised if we break past 200. I think 200 is safe by Friday, assuming markets hold up and don't dumpster dive. And then if we go to the chain audit, very similar looking chart but different. This is the gamma exposure. So this up here is the current upcoming expiration, and then down here is the total. And we have that same gamma ramp looking effect for the entire chain across the board, 155, 165, and 170. And then we start to dissipate a little bit because of the long short put gamma. I'm going to put that in quotations. And then we actually have some negative gamma on the 185 call. So we're probably going to see some repositioning on that tomorrow. But even today, that was today's ramp right here, 165 up to 175. And if we kick into trading view real quick, we're going to see let's skip down to the 5 minute. So today we opened at 176 and reached a high of 186, 187, and then in after hours approaching 190. So very indicative of we can't tell you exactly what's going to happen, and we wouldn't want to, because if we could tell you what was absolutely going to happen, we'd be frauds, because that's just not possible. We can get really close, though. And we have a whole arsenal of tools that let you do the same, and they all can aid in corroborating, what your interpretations are. And this tool makes it really easy for you to come up with your own interpretations and to understand how everything's working. Next over here, we have dark pool activity, and we see, a huge order for almost 100,000 shares at 184.25, which is notionally $17 million. And then we can see kind of a chronological version of that right here. Chain analysis, this also needs some TLC. We'll get to that in a little bit. Exposure analysis also needs some TLC. It's working. You just need to toggle the value, and then it'll load. Options map is really cool. If it wants to load. That's all right. We'll come back to that too. Insider trades. There was actually some selling that took place today, I believe. Yeah. Let's see. Just over 9,000 shares and 1,000 shares. And then this chart needs to be updated with our new library, but that's okay. You can see the chart of the insider buying and selling. Liquid scan is really cool. You can see the aggressive call volume versus aggressive put volume across each expiration. Tons of really cool stuff with this. Aggressive call volume, aggressive put volume. And of course, we saw aggressive call volume kick up on the 22nd. I want to make sure I have that right. Yeah, so on the 22nd, we saw a huge jump in call volume. And of course, you can see what happened on the 22nd. It was pretty magnificent. Yeah, right here. Oops. I need to get rid of that. Why is all of it still here? Okay. So the 22nd would have been right here. So this was from 167 up to 178. Pretty consistent, activity that you can derive from all of this. And then of course we have trade signals for options, and we have trade signals for dark pool stuff. Lots of things you can go by, out of the money, and we'll do like sweeps only and apply that. And here's pretty much all the trades I would be looking for. There's EWZ popping back up again. That was at the start of the video. More EWZ, some Cisco, all sorts of cool stuff. And then dark pool orders. Let's see if this wants to load. Nope, we'll fix that. Option sentiment, all sorts of stuff. And then lastly, this has gone way longer than I meant for it to. What I like to do, because we have the flow table here. This is really, really cool, and this is something that we're now seeing other competitors of ours take some inspiration towards, to put it nicely. Along the top here, these data tiles for the put to call ratio, which you can hover over to get an understanding of, the total trades, call premiums, these morph to whatever is loaded in your table. So if you want orders for a different premium, if you want orders for a different expiration, this table and the data tiles will adapt to that. So then what I can do is I can say, okay, so we have total trades up here. The green bar represents the calls, whereas the red represents the puts. So we have 75% being calls for these total trades. The call premiums are leaning a little bit towards the sold side. That's what the red represents, and the green represents the purchase. Puts, same thing, leaning towards the selling. But then the call volume and put volume have a little bit of a discrepancy. So if we toggle all of these trades to just sweeps, now we can see that of the 36 trades that match for a sweep, we have predominantly calls. And of those calls, predominantly being purchased. And of the puts, predominantly being sold. And of the call volume, predominantly being purchased. And of the put volume, predominantly being sold. And we can do other things like daily volume greater than open interest, single leg trades. This is like game-changing stuff. And this is all I have to do throughout my day. It's so simple. It's so easy. Daily volume greater than weekly volume is another great one that implies some repositioning. And, we saw all these puts being sold for QQQ, SPY, QQQ calls being purchased out of the money, more puts being sold. It's really, really, really easy. And this is basically my day to day. So tomorrow I'm going to be live trading. I'll have my screen being shared and all that. Hopefully, we pull another 5-digit day. It'll surprise me if I don't. But I'm going to leave it at that because this has gone on way too long. I'm hungry. I'm tired. And I really want to wake up for market open as soon as possible because I got crypto calls, baby. It's going to be a good day. Good day. And good day to you. I will see you in the next one.